This is a potential long trade idea and technical analysis on First Republic Bank, a company of the financial services sector and banks and regional, here off the 5-minute interval. It is the number one most mentioned, most popular Wall Street ape village stock amongst all the apes in the ape village. And if there was any potential for a higher elevated increased odds of a short squeeze setup, this would probably be it. I believe this is the bank that decided to go and gamble on crypto up on the books that they had appeared. But again, we have Jerome Powell really faced with a difficult dilemma right now, as a significant portion of these U.S. banks may be technically insolvent due to the huge drop in value of treasury bonds that they hold, completely eroding all of their equity at this point in stage, with interest rates starting to rise at the fastest pace in history. And while bailing out individual banks may be politically unfeasible, a potential solution may be to purchase these huge amount and chunks of treasury bonds and these massive quantities, really effectively reducing the rates and restoring solvency amongst some of these key functioning banks. However, the strategy could also result in a significantly higher rate of inflation. We'll see what happens, but here we are. We got, I believe we're in a pretty pivotal inflection point, especially in the near term. We have huge positive and or bullish divergences and a huge divergent low here on all four indicators. We have near term exaggerated and or positive and or bullish exaggerated divergences on really three of the four momentum indicators down below, with the crossover of the MACD starting to gun up towards the zero line. So again, just a pretty key inflection point of the zero fibs retracement. We had that put in a potential double bottom here, where we backtested, came back up here, backtested once again, and here we are sitting upon a key inflection point. Anything could happen as far as a little bit more downside to come, or we could continue this primary uptrend line here off the 17th reactionary highs off the 17th of March, and we could have definitely a more so wedge pattern that tends to possibly coil up. But what you want to see is a breakout amongst this primary downtrend line here. Bulls traders, long traders want to see that breakout. They want to see that breakout finally ensue, coinciding with the 55-minute moving average hovering and up above, called a dual line of support that we could take out, and then a big move on a backfill the gap. Complete backfill the gap would be at least two key functioning targets right there: 1705 up to 20012 price resistance, coinciding with the primary downtrend line off the 10th reactionary highs of March. Call it a pretty key pivotal inflection point. Multi reactionary highs to help validate that, which will coincide with the 205-minute moving average hovering up above there. So watch for a key breakout, set some stops below, and you could see some pretty massive gains if attainable and if the breakout holds. Whereas you're looking at a complete breakout, maybe on a back test of the zero fibs retracement, with nice stop loss down below for maybe 10% stop loss. You want to keep a wide range of stop losses and a huge beta move of each direction in a short squeeze stock of this nature, of this extreme volatility, maybe 10 or 15%. You compile the math together. I'm here to give you the really the biggest inflection points in my opinion. So that first right there, that first on backfill the gap, maybe even this first gap, you're talking about 2-to-1 risk reward ratio with 25% in gains, up to that second top of the gap resistance there, call it for 44%, up to this first T1 for 70% in gains, coinciding with that primary downtrend line, and 205-minute moving average. T2 2496 for 109% in gains, up to 3009 price resistance, coinciding with the 236 fibs retracement for 155% gains, up to the 382 fibs retracement, 4143 price resistance for 249% in gains, up to the 50% fibs retracement at 5059 price resistance for 325% gains, up to 5974, 618 fibs retracement for 405% gains. And then ultimately, if things get really squeezed out to the upside, 786 fibs retracement for 7278 price support for 513% in gains there. So we'll see what happens. Anything's possible. I'm a short seller. Vast majority of my trades are considered short. I would not be anywhere remotely close to be trying to short this key stock right now.